So there's a lot of things on this list. Folks should definitely read Modern Monetary Theory, of course, which basically is we're just changing our minds about things. One that jumps out is the tariff truthers. We all agree tariffs are bad. We people who understand economics, and yet do we?
Well, that's Sean Donnan in Washington wrote that one, and he picked up on the voices that are talking in Trump's ear, telling him that tariffs, building a higher tariff wall can make the U.S. economy stronger. And, you know, the funny thing is about this, it's not a brand new idea. Over the course of American history, back to the founding of the Republic, you've had people saying this. And there are certain developing countries where it's policy. So the idea that though the U.S., which has been a guarantor of free trade around the world ever since World War II, would now be voicing these same things is troubling to a lot of people.
Peter, thank you so much. A great read on Bloomberg Business Week economics editor Peter Coy there. And staying on the tariff theme, another round of high-level trade talks. U.S. Treasury Secretary Steven Mnuchin and other top U.S. trade officials will be heading to Beijing next week, looking to hammer down a trade deal before tariff increases on Chinese goods ramp up in early March. For more, let's welcome in Pamela Koch-Hamilton, Director of the Division on International Trade and Commodities at the United Nations Conference on Trade and Development. She comes to us from Geneva. Pamela, great to have you with us. So you just released a study on U.S. tariffs on $250 billion of Chinese goods portrayed by the Trump administration as meant to protect U.S. jobs and an economy that's been taken advantage by China. Tell us what you found on the effects of these tariffs.
Thanks so much, Sherry. What we have found is that there will be a significant diversionary effect, particularly if the tariffs are escalated to 25% as of March 1st. In other words, if there's no agreement before March 1st, the diversion away from trade with the U.S. is going to be significant, and it will not protect domestic firms. In fact, what will happen is we've already calculated that the EU may gain up to $70 billion in terms of the trade diversion, and Japan, Mexico, and Canada will gain over $20 billion each. Interestingly, $27 billion gained by Mexico will also be almost equal to 6% of their entire exports. So it will be significant.
And how much of that is quickly reversible? In other words, how much of the flows would change if we saw tariffs on certain products come off, Pamela? Is it possible to say or no?
At this stage, the impact has not been irreversible in the sense that 10% is not, it's not negligible, but it's not harsh. And therefore, there haven't been movements yet in terms of the relocation of investment by companies. They're still holding a watching brief, if you want to call it that. But if it escalates and ratchets up to 25%, then we will find that a lot of the movement in the value chains is going to change. A lot of countries are going to lose significantly, particularly the East Asian countries. They will lose up to $160 billion in terms of their value chain supply side issues. And in addition, what will happen is that over 85% of the U.S. Tariff, well, that's the goods subject to U.S. tariff, will be diverted. So it's not going to be very good, and it won't be productive for either the U.S. or China, or frankly, the rest of the world.
But Pamela, how about those countries that clearly benefit from U.S.-China trade tensions, such as Brazil, that's selling more soybeans to China?
Yes. In a way, it's a double-edged sword. Yes, Brazil has benefited. Their increase in exports to China has been significant. But it also it could backfire in the sense that their ability to produce effectively over the long term to supply a huge Chinese market will also pull away from their ability to produce livestock feed for their own competitiveness, for their own other sectors. So yes, it's good in the short term, but whether it will actually work for them in the long term is yet to be seen.
One interesting part of the analysis is just who does benefit if the harms are kind of diverted away, trade gets diverted. We're talking a lot today about slowdown in Europe, and it seems to be having an effect on markets. Actually, European firms could well be a beneficiary of Chinese-U.S. tariffs?
Yes, precisely. We found that the diversion is going to be most beneficial to European firms. Over 70 billion is what we've calculated. And it will be in the areas of chemicals, vegetable products, equipment and machinery. Frankly, the biggest one will be in machinery, almost 20 billion. And of course, agriculture will be affected. So the European market or the European countries will do well. But the others, I think what's more important is to look at the impact on the international trading system itself, however, because even though some countries or some regions may benefit, in the long term, the escalation in tariffs can lead to more prohibitive tariffs from other countries, and then we enter into a full-scale global tariff war. And I think what's important is to see if we can actually strengthen the multilateral trading system again.
All right. Great to have you with us for this.